Welcome to Explain the Charts, where we dissect the market to understand what's happening and how to potentially capitalize on it. Today, August 28th, we're delving into Intel Corporation, INTC, stock, examining recent news and events that might be influencing its price action. From the current tech climate to earnings reports and industry developments, we'll explore how these factors are shaping the Intel narrative. Intel has been making headlines recently, with its stock experiencing a decline amid uncertainty about its new plant in Germany. Analysts are questioning the viability of the project as it could come at a significant cost, potentially impacting the company's overall financial performance. Additionally, Intel's stock has lagged behind its peers in the semiconductor industry, which have been buoyed by hopes surrounding artificial intelligence, AI. These recent developments have fueled doubts about Intel's future prospects, creating a bearish sentiment towards the stock. Now, let's shift our focus to the charts and see if they corroborate these news-driven concerns. Looking at the daily chart, we can see a clear downtrend in Intel stock, with the price steadily declining over the past few months. This trend is reinforced by the fact that each successive candle is closing lower than the previous one, indicating a consistent selling pressure. The chart also shows a significant decline in the stock price, with a sharp drop from around $35 in July to the current level of just over $20. This suggests that the market is responding negatively to the recent news and events, validating the bearish sentiment. Moreover, the daily chart reveals a series of lower lows, which further reinforces the downtrend. These lower lows indicate that the selling pressure is increasing as the stock price is consistently making new lows. We can also observe several failed attempts by the stock to break above resistance levels, indicating a lack of buying power. These resistance levels are marked by previous highs that the stock has failed to surpass, suggesting that the market is unwilling to push the price higher. It's important to note that these resistance levels are dynamic and can shift over time as market conditions change. However, it's a crucial factor to consider when deciding when and at what price to trade. The daily chart also showcases a clear area of support, which is a level where the price has found buyers in the past. This support level could be a potential buying opportunity for those who believe that the downtrend is nearing its end. The daily chart reveals a concerning trend with the stock struggling to break above significant resistance levels and consistently making new lows. This indicates a potential for further decline in the short term, although the presence of support levels could offer opportunities for those willing to take a risk on a potential reversal. To gain a clearer picture of the short-term price action, let's now switch to the 1-hour chart. The 1-hour chart paints a similar picture to the daily chart, showing a clear downtrend with several lower lows and failed attempts to break above resistance levels. The candlesticks on the 1-hour chart are quite small, indicating a lack of volatility and a general lack of interest in the stock. This lack of volatility could be interpreted as a sign of market uncertainty, as investors seem to be hesitant to make any significant moves. It's important to keep in mind that this uncertainty could continue in the short term, potentially leading to further decline. However, the 1-hour chart also shows some signs of potential support levels where the price has found buyers in the past. These support levels could provide opportunities for short-term traders who are looking to buy the dips and profit from a potential bounce. Let's now delve into the 15-minute chart to see if we can spot any interesting patterns or insights that might shed light on the immediate future. The 15-minute chart showcases a more volatile trading environment compared to the 1-hour and daily charts, with candlesticks exhibiting larger price fluctuations. This increased volatility could be attributed to short-term trading activity, as traders attempt to capitalize on the rapid price swings. It's important to note that the 15-minute chart is often considered to be too short-term for long-term investors and can be quite risky for those who are not experienced in short-term trading. The 15-minute chart can be helpful for identifying potential entry and exit points for short-term trades, but it's essential to exercise caution and manage risk appropriately. To illustrate a specific example of short-term trading opportunities, let's zoom in on the 15-minute chart for the past few days. Looking at this specific time frame, we can see a series of price spikes and dips, which could have presented opportunities for short-term traders. For instance, a trader who identified a spike in the price could have entered a short position, anticipating a pullback. Conversely, a trader who identified a dip in the price could have entered a long position, hoping to capitalize on a rebound. It's important to emphasize that short-term trading is inherently risky and requires a high level of skill, experience, and risk management. In conclusion, the overall sentiment surrounding Intel Corporation, INTC, appears bearish, with the stock facing downward pressure due to concerns about its future prospects and lagging performance. The daily chart exhibits a clear downtrend with lower lows and failed attempts to break above resistance levels, confirming the bearish sentiment. However, the presence of support levels could offer opportunities for those willing to take a risk on a potential reversal. The 1-hour chart mirrors the daily chart, reinforcing the downtrend, while also showing potential support levels for short-term traders. The 15-minute chart displays a more volatile environment, presenting opportunities for short-term traders, but with increased risk. It's important to remember that these are just technical signals and don't guarantee future price movements. The market is constantly evolving, and it's crucial to stay informed about news and events that could influence the stock price. Ultimately, trading decisions should be based on a comprehensive analysis of both fundamental and technical factors, combined with a strong risk management strategy. Remember, this video is for educational purposes only and does not constitute financial advice.